Hey guys, it's Luke with the Common Investor here, bringing you another video. Today we're going to get into where to invest $100 in 2019, and I'll be using the investing app M1 Finance, so stay tuned. Alright, so getting right into the video, we're going to be discussing today where I feel the best place to invest $100 in 2019 is. And as you can see pulled up, I have M1 Finance, and I actually have this ETF fund pie that I also If you haven't heard of M1 Finance before or used it, feel free to check it out using the link in the description below. I'll also attach a link to this pie in the description below as well, so you can use it if you do have M1 Finance. And if you want to get started, you can feel free to use this pie or just use the link and get started. So jumping right into the fund here, this fund consists of 6 ETFs that I've picked that I feel are very safe and very long term for investing. So the first in the pie and the largest holding I have is ticker symbol VOO, and that's Vanguard's S&P 500 ETF. So Vanguard's S&P 500 ETF, it's right in the name. It tracks the S&P 500, Standard & Poor's S&P 500, and it's usually the market indicator of where the American market's going. Over the past 100 years or so, the S&P 500 has returned about 10% annually. So definitely a very safe bet. With Vanguard ETFs, they have very low expense ratios. This one is 0.04%, so very low. And it also comes with a 1.83% dividend yield. So definitely a great place to invest that majority holding. So next up here we have ticker symbol QQQ. That's Invesco's NASDAQ tracking, so very heavy in tech. As you can see, expense ratio is a little bit more expensive than SPHD. Dividend yield is a little bit lower. However, as you can see over the 5-year, returning 92%. So it's definitely more of a grower. And one technology I believe is going to be a huge player in the future of the world. I feel like that's kind of where we're going, and I see nothing but positive things for technology. So I think this is going to continue to grow. As we can see, the breakdown of what QQQ holds, so just about the entirety, 97.5% U.S. stock, 2.3 non-U.S. stock, and the rest is cash. And the top holdings are Amazon and Microsoft, so a couple of great companies right there. So that's going to round for 25% of the portfolio. Next up, we have SPHD. So SPHD is another Invesco ETF. What they track is the 75 highest dividend yielding stocks in the S&P 500, and then they take 50 of the least volatile of those names. So as you can see over the past year, it's pretty much flat, up about 5%, definitely seeing a huge rebound from the lows of the Christmas Eve. And what they are a very high dividend yield, as you can see, about 4%. Expense ratio is definitely very high at 0.3%. And as we can see, the top holdings are HCP and Welltower Incorporated. If you know those names, you know they're very high dividend payers. This is also a monthly dividend payer. So I'm going to recommend this in the portfolio for the sole reason of kind of having that consistent cash income coming into the portfolio. So if for whatever reason we go into a market downturn, you're going to have that consistent cash flow coming into the account every single month to help you average down on your cost. Next up, we have CQQQ, another Invesco company ETF. So what CQQQ is the Chinese technology, and it tracks mainly the Chinese markets, and obviously in the name, technology. Expense ratio is definitely very high at 0.65%. Dividend yield a little on the low side, 1.11%. However, it's a technology ETF, so you're not going to see that dividend be very high whatsoever. As we can see over the past year, China has not been performing very well whatsoever. They also the dividend is paid once a year, around the end of December. So they have 81 holdings. Top holding is Alibaba. Alibaba is a great stock, but I see over the long term, China's going to rebound, and they're going to have a strong economy. They always do. They'll have one of the biggest economies in the world. So I see them rebounding here very soon. If they've already started, then that's great. The CQQQ is going to be about 10% of the portfolio, so not a big portion. Next up, we have ticker symbol VWO, and that is going to be Vanguard's Emerging Markets ETF. Another great ETF. The expense ratio is very low at 0.14%, and then the dividend yield is pretty solid at 2.73%. So what Vanguard's Emerging Markets ETF is going to do is they're going to mainly expose you to non-US stocks, and as you can see, 95.5% of the stocks in this ETF are not in the US. So you're getting a little taste of the rest of the world. And as you can see, there's 4,073 holdings, so a massive array of different companies and corporations that you'll have in this. As you can see, over the past year, not been performing well. However, over the 5-year, we're still pretty flat, and you got that dividend coming in every quarter, I believe. And now, getting into the last ETF I have in the portfolio, more of a speculation and definitely a lot more volatile, and that's why I only have it at 5%. It is MJ, and that is the alternative harvest, and this tracks mainly the cannabis industry and marijuana stocks. So as you can see over the past year, up and down, very, very volatile. Expense ratio is going to be the highest you have here at almost 0.8%. Dividend yield almost 2%, so not too bad there. However, they're going to track mainly marijuana stocks, and I have a bullish thesis on marijuana stocks in the future. I think they're going to be shooting sky high, no pun intended there. But as you can see, the top holding is Kronos Group. Kronos Group has been on an absolute tear as of late. So they have been shooting high, and I see nothing but great things for MJ. So that's going to round out the portfolio, the pie I have here. If you haven't checked out M1 Finance, feel free to check it out. It's a great investing tool. It lets you invest fractional shares. So even with $100, you can invest in all 6 of these ETFs. You don't have to buy full shares of them. As you can see, I was going through. Some of them are $200. Some of them are maybe like $30. So definitely a wide array. However, you can put any amount of money in there, and they're going to give you fractional shares. So that's a great place to invest $100. So with that, I'm going to leave it at that. Let me know where you're investing $100 in 2019. Would love to get your guys' comments in the description. And if you like the video, feel free to like, comment, and subscribe. And I'll see you guys in the next video. Thanks.